following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Well, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve on the TFNN Radio Network. Just a reminder, my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. You can also find me on Channel 1 on Tiger TV at TFNN.com. I think I have that right. If I don't, I'm sure my producer will let me know. Channel 1 on Tiger TV. You can also pick the show up on iTunes or listen live on your smartphone at tfnn.mobi, tfnn.mobi. Give me a call. I want to hear from you. We can talk about this market. The number to use to get through is 877-927-6648, 877-927-6648. Let's take a look and see where we're at in the market right now. Looks like we have a little bit of a comeback underway. That's good to see after sharp losses early. The Dow's currently at 12,482. That's down about 66 points or 0.5%. Selling a little less intense in the NASDAQ. That's at 2778, down 4 points or 0.2% thereabouts. And the S&P 500, 1326. That's down 3 points or 0.2%. But major stock indices look like they're well off their session lows. So we'll see what kind of close we get. There's a good bit of volume behind the market today. NASDAQ volume and volume on the New York Stock Exchange tracking quite a bit higher than Monday's level. So if we can see a good rally into the close and perhaps even turn green with a good volume push, that would be compelling. I was talking with a good friend of mine, Joe Famey in Santa Monica, California yesterday. We had lunch. He's a money manager in Boston, and we were both saying that probably the best thing for this market right now would be to get a meaningful pullback, maybe in the order of 10%. If you look at the 200-day moving averages for the Dow, S&P 500, and NASDAQ, I mean, they'd only have to correct about another 7% or so from here to get all the way down to their 200-day line. So we did have some pivotal action in the NASDAQ today. It undercut its 50-day moving average. The NYSE Composite was actually the first index to do that several days ago. It fell below its 50-day, then it rallied back up, and then it fell below it again. But the NASDAQ joined the party today. It was down underneath its 50-day moving average, and the S&P 500 as well. The Dow is stubbornly still holding above its 50-day moving average. But if we get a meaningful break below the 50-day moving average, and we start to, we continue to see distribution or professional selling in this market that we've seen for several days now, I think that the 200-day lines could be in play. I've never been a big predictor of what's going to happen in the market, but when I look at my stock screens and I look at really the lack of viable buy candidates out there right now, I know that stocks really could use a time to base, consolidate gains, shake some sellers out, and that's where the real powerful buying opportunities are going to come. So my Ultimate Growth Stocks newsletter and model portfolio is now about 70% cash. I've been taking profits in some big leaders that I bought back in September off the August and September lows. So I've been taking profits. I've started sporadically started with some new initiations, but they're really not making much headway, which I think is a market tell right there. I think the distribution in the market is worth paying attention to. And it's when big investors, when institutional selling is in the market, it's a difficult environment for stocks to make headway. Whether it's a great, strong stock or a bad, all stocks are going to have problems making headway in a market that's under distribution. So I mentioned my Ultimate Growth Stocks newsletter that launched just a few weeks ago at tfnn.com. Don't forget, you can get a trial right on the home page. Click the newsletters tab right at the top. Click on investment newsletters, and then you'll see Ultimate Growth Stocks right there. It's a growth stock newsletter. Again, I'm only 30% invested right now, but I do have some new positions that I started in recent weeks, and we'll see how those work out. But for me, I would really like to see a meaningful pullback here where that will allow time to set up and consolidate gains, and then you'll get good fresh breakouts where really the big money can be made. All right, let's take a look at the metals today. Gold for June delivery fell $10.60, 0.7%, settled at $14.80 an ounce. Again, the weakness in the market today, you've got your commodity stocks acting weak against the weakening dollar. Silver had an even rougher day than gold. The July contract was down 64 cents. That's a 1.9% decline to $33.49 an ounce. June crude oil closes at 96.91 a barrel, down 0.5% on the day. I want to just pull up a chart of the ETF UUP, and that ETF tracks the performance of the U.S. dollar index. And for those of you at TFNN.com that are listening to the show in the Tiger's Den, you'll see the chart of the UUP. I mentioned last week that the dollar has been below its 50-day moving average for several months now, and typically what happens when a stock or ETF falls below this support level, the 50-day line can often turn into resistance. Now, last Friday, you had another bullish move in the dollar. It actually just blew right through the 50-day line, closed above it. But then yesterday, it closed lower, and today it's all the way down at the bottom half of its trading range. The UUP was recently down only 3 cents to 21.59, but this story of resistance at the 50-day hasn't fully played out yet. Again, Friday it closed above the line. That was a bullish signal that higher prices could be in store. But Monday and Tuesday you've got renewed weakness in the dollar, and so we'll see. I think that 50-day line is still in play, and it still ultimately could turn into resistance. And if the dollar weakens, who knows? Maybe we see some upcoming strength in the major stock indices. Okay, the Dow has been underperforming for the better part of the day today. A lot of carnage in the Dow. Of course, Hewlett-Packard, the big story there. Shares are down 8% to 3670. We'll go ahead and pull up a chart of HPQ. We've talked about a lot of the issues that large cap tech stocks are facing, whether it's a Hewlett-Packard, a Cisco Systems, a Microsoft, but certainly Hewlett-Packard was in a lot of technical trouble ahead of its earnings report. They were actually supposed to report earnings later this week, but they came out early. The company cut its full-year outlook. They cited the earthquake in Japan. PC sales are soft, and their tech services business is not doing that well. So HP's technicals were very weak headed into the report today. Shares were recently down about 7.5% to 36.79. Again, do you buy the stock when shares are truly cheap now? My strategy for my ultimate growth stocks model portfolio is to buy the quality in the market. I like to buy stocks that are expanding earnings and sales growth. They're innovating with a new product, new service. They're showing strong relative price performance in the market, and HP really doesn't show any of that now. I remember HP has a new CEO. They hired Leo Apotheker. He was ousted from SAP in February 2010, and he came on after Mark Hurd had his ethical troubles at HP, and a lot of eyebrows were raised, frankly, when Leo Apotheker was hired. They really didn't spend a lot of time searching for a new CEO, and people just weren't sure when he was hired that he was the right man for this job. And certainly Leo Apotheker has a lot of work ahead of him to get HP back on the right track. I'll take a look at Home Depot in the Dow. Home Depot, actually a bright spot in the Dow. Earnings earlier today were pretty solid. Shares were recently trading up just over 1% to 37.39. Technically not looking too bad. It's been trading right around its 50-day moving average for several weeks. It is trading right in the middle of its intraday trading range today, still pretty close to its 50-day moving average. Home Depot is not going to give you explosive price performance, but it is a company that they had good earnings today, no question about it. EPS up 11%. From the same quarter 1 year ago. Sales were flat at $16.8 billion, a little bit below expectations, but the thing with Home Depot was the guidance that they gave. They actually issued a pretty good outlook for the rest of the year, and when you compare what Home Depot said to what Lowe's said just recently, certainly Home Depot seems to have the upper hand big time over its competitor Lowe's. More earnings in the retail sector today and this week. There's really a lot of earnings reports to take a look at. We had shares of Walmart down close to 1% to 55.57. Not a great number from Walmart, I don't think. This is a company that really, competition seems to be becoming an increasing problem for this mega cap retailer. EPS up 13% year over year. Sales came in at $104 billion. I think that was up 3% from the year ago quarter. The thing that sticks out with Walmart is that the first quarter earnings marked the 8th straight quarter of declining same-store sales growth for the company in the U.S. So the U.S. operations are an issue. Sam's Club, their warehouse, continues to do pretty well, and overseas business continues to do pretty well as well. But the issue is this declining same-store sales growth in the U.S. And Bill Simon is the head of Walmart's U.S. operations. He talked about rising gas prices, high unemployment, increasing inflation. The big issues facing the company's customers today. Other outperformers in the Dow today: IBM up 1% to 170.74. We'll take a look at IBM real quick. IBM has been showing pretty good price strength in the market. Technically, it still looks pretty solid. You can see the chart right here for people in the tiger's den. IBM still holding well above its 50-day moving average. There have been an increasing number of technical breakdowns in the market, not so much in the large cap space, but in a lot of the higher beta growth names that I follow. Still plenty of stocks holding above their 50-day moving average, but starting to see more and more technical weakness in the true market leaders. And that's when you have that coupled with increasing distribution, professional selling in the market, it normally precedes even lower prices for the indices. So we'll keep an eye on that. But IBM, good day in the Dow today, and also Microsoft, another large cap tech name in the Dow. Microsoft, a company that definitely is facing challenges as well, but the stock is outperforming today. Probably in light of HP's news, and Microsoft, you can see in a world of technical hurt as well. So when we come back, we will talk about some economic data that we saw today. There are some stocks that buck the trend, some leaders under pressure, so a lot to go over. Don't forget the phone number to use, 877-927-6648. Give me a call. We'll be right back, folks.
For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors. investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, folks. Breakout Investing with Ken Shreve. We've got Joe on the line from Boston, my old stomping grounds. Joe, how are you?
Hi, Ken. How are you?
Everything's good, thank you.
Good. You're not missing anything in Boston here with this weather?
You know, it's kind of overcast and gray here in Southern California, you know, sort of in line with the day in the market that we're having, but, you know, I can't complain.
Anyways, I was wondering if you follow this company, RES?
You know, I know of it. You know, I haven't been following the oil and gas names that closely lately, just because a lot of them are, you know, coming off their highs in volume, and I think they're ready to base for a little while.
Right.
You know, I think that it's probably when we do start a new uptrend, I'm not convinced that the true leadership is going to be in the energy sector. But I know RPC a little bit. It's a, you know, oil field services company. You know, looking at its chart, it certainly has been a strong, you know, price performer in the market. Excellent relative price strength. You know, good solid technical breakout. You know, you hear me talk a lot for listeners that are still getting used to me. You hear me talk a lot about base breakouts, and RPC had a good solid breakout in, you know, mid to late March, and you know, after that, it's kind of looking a little sketchy. It looking like it wants to consolidate gains. It's you know, underneath its 50-day moving average, which tells me it's a little bit tired. But you know, fundamentals look pretty good. You know, probably not a stop. I'd let it just consolidate for a while and see if it tries for another breakout at some point.
Right. So will you look to, if I know you like to kind of buy them on the way up,
right.
but if you were going to buy, you know, stocks that in base that were forming base, if you look at this base, where would you say the bottom of the base is?
Well, that story has yet to be determined yet, you know, because if the market, if the indexes continue to come in and we see the dollar strengthens and these you know, commodities remain under pressure, you could see more weakness in RPC. So, you know, typically if the market corrects 5%, a company like RPC is going to come down, 10, 15% off its high, give or take, generally speaking. So, it looks like there's probably pretty good support just over $21 a share. Where's it trading right now? Around $22 a share. So it could try to bottom around $21 and then start to move higher again. But it's just a base building stock, and if the market continues weak, it's probably going to come in a little more with the market. But typically, when a stock builds the left side of its base, how much it corrects is based on how much the major averages correct. Again, a 10% pullback in the market, you're going to see a lot of bases correcting, 20 to 25% on the left side, and then that's probably the end of it. So we'll just have to see how it shakes out in RPC.
Can I ask you about one more?
Sure.
Sure. ENTG.
ENTG. Take a look at ENTG. Okay, that's Integris. Yeah, another name that I'm not entirely familiar with. Pretty liquid stock, average daily volume of 1.4 million shares, small cap, market cap of 1.6 billion. Yeah, this is another stock that's made a really nice price move in 2010. Technically, it looks a lot better than RPC. I can say that right now. Looks better fundamentally. Looks better technically. Chip equipment company. Pretty clear buy point. I could probably call this sort of a wide and loose cup with handle pattern. I'd put the buy point at around $9.28. That's its high. It's set in April. Right. The chip stocks continue to show strength. Intel continues to act well. I was going to talk about the Semiconductors Holders Trust a little bit later. I haven't given up on the chip stocks yet, but this is it's a really tough market where distribution is out there, and that typically makes it a tough environment for even technically healthy stocks like Integris to make headway. But it doesn't look too bad.
Okay, thanks, Ken.
All right, Joe. Take care. Thanks for the call.
Bye.
All right, Joe from Boston. Yeah, Integris. There's a lot of small cap chip makers. First of all, I think the chip makers, the chip sector is it's gonna be an area where you're going to continue to see consolidation. If you're looking where more merger and acquisition activity is going to take place in the market, I think that the tech sector, specifically the chip sector, it's still very fragmented. A lot of small cap chip equipment makers, a lot of small cap chip makers that are innovating, and Integris, good fundamentals, good technicals. Not sure the market's going to let this one break out, though. All right, quickly before we go to break, a couple of pieces of economic data earlier today. Housing starts dropped 10.6%. to an annual rate of 523,000 units in April. Starts in March, good news, were revised upward to 585,000 from an original reading of 549,000. Still don't like the home builders. I think the sector is just no visibility, still cloudy as to when this inventory is going to work itself out. So we'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. If you're looking for a unique approach to the market, consisting of a focused discipline, including risk and money management, this book is for you. It'll allow you to take control of your finances. The Art of Timing the Trade is a complete system for making money, protecting profits, and minimizing losses. Go to Amazon.com now and order your copy of The Art of Timing the Trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Okay, folks, welcome back. Ken Shreve with you. Breakout Investing with Ken Shreve on the TFNN radio network. Quick check on the markets here. Dow still underperforming, down about 88 points now to 12,460. That's down 0.7%. NASDAQ hanging in there pretty well, only down 3 points, 0.1% to 2779. And the S&P 500 down 2.5 points or so, 0.2% to 1327. Here's a chart of the S&P 500. For those of you in the Tiger's Den, you can see the S&P 500 slipped below its 50-day moving average, right around 1323 earlier in the day. It's now trading slightly above it. You can see support for the S&P 500 for here is probably going to be just underneath 1300. After that, you go down to a recent low. Oh, it looks like that's going to be in the 1250, 1255 range. And then I talked about the 200-day moving average for the S&P 500 all the way down at 1234, 1235 at this point. But still, the correction from 1326, where it currently is, down to 1234, 1235 is only about 6 or 7%. And considering where we've come from, and you know the number of extended charts there are out there, it's not out of the question that we could correct down that much. Now, I mentioned before we went to break this weak housing data that we got, the housing start data. Tomorrow we've got the release of the FOMC minutes from the last Fed meeting. That's going to be out at 2 p.m. Eastern time, and I've been hearing from people that at some point we're probably going to start to hear the Federal Open Market Committee get more hawkish and talk a little bit more about inflation and the prospects for inflation continuing to heat up in coming months. And if that happens, if that scenario plays out where the CPI, the core rate and the CPI and the core rate and the producer price index get above that 2.5%, 3% growth, that could force the Fed's hands to raise interest rates before the end of the year, which I still think is a possibility. Now, that said, I know that the Fed is not interested in seeing a great amount of wealth lost in the stock market and seeing a big market correction grab hold. So I'm sure they'll keep QE3 in their back pocket, and if they see signs that the economy is starting to slow, they won't be afraid to lose that to launch QE3. So the bottom line right now is we'll have to listen to what the Fed minutes have to say tomorrow. That could be a market mover, especially if we start to hear a more hawkish tone from the Fed. So that's what's coming up tomorrow. On Thursday, we've got weekly jobless claims. That's gonna be interesting. They're expected to fall to 420,000 from 434,000 the prior week, and then we also have existing home sales for April. They're expected to come in at 5.23 million units, up from 5.1 million in March. Now, what's interesting, people try to NASDAQ just goes positive, by the way. Looks like it's now up close to 1 point to 2782. That's it's good news for the NASDAQ. Some resilience today. But yeah, some people are saying, so what is this recent distribution in the market all about? Why did we see these heavier volume declines in the NYSE composite between May 3rd and May 5th? And we had a higher volume decline last Wednesday. We had another one on the NASDAQ yesterday. Why are institutions starting to sell stock? Well, I think it's partly profit taking. Yeah, and I've been taking profits in my market movers, not market movers, my ultimate growth stocks model portfolio. But this recent weakness in the market could be in anticipation of higher rates down the line. Now, I think the market can still do well. I've said that incessantly, that just because the dollar is strengthening and interest rates start to rise slowly, remember why that's happening. It's happening because of a strengthening economy. The market likes a strengthening economy with inflation kept on a tight leash. So I think that we can still have a good year this year. But again, the recent selling in the market, have to pay attention to it. Doesn't make sense trying to catch falling knives here. So I'm playing defense right now and happy to be doing it. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, folks, welcome back. Ken Shreve with you on the TFNN Radio Network. My show is called Breakout Investing with Ken Shreve. I don't know if you saw the news earlier today about LinkedIn. You know, we've been talking about an IPO market that is starting to show signs of life. So far this year, 62 IPOs have priced, according to my friends over at IPOhome.com. That's up 26.5% from last year. Total proceeds raised of $20.7 billion. That's up close to 190% from last year. So right now, compared to the same time last year, we're seeing increased activity in the IPO market, and I think partly that's a result of companies feeling more confident about the market landscape. And anyway, the news from LinkedIn. This is a popular social networking company. They raised the price range of their initial public offering by 30% today. The shares are expected to come public this week. I believe on Thursday. It's going to trade under the ticker symbol LNKD. So it looks like demand is very strong for LinkedIn, the IPO of LinkedIn. They raised the offering range to between $42 and $45 a share, up from the previously announced range of 32 to 35. So that's a pretty big raise, and so we'll see how LinkedIn's IPO goes later in the week. I wanted to take a look at Yanzhou Coal Mining. This is a China-based coal miner. There really hasn't been a lot of good news in China when it comes to individual stocks. Really, the real technical damage in this market was done to the China internet names, names that we've talked about on this show before. The search engine Baidu, ticker BIDU, Sina, Sohu, these internet portals that really got hit with waves of institutional selling in recent days. But Yanzhou Coal Mining is interesting. This is a stock in China that has not broken down yet. You can see shares were recently up close to 5% today to 37.47. Came right down to its 50-day moving average, just over 35, and gapped up today. There was some news today. Yanzhou recently put in a bid. They bid $3.8 billion for an Australian coal mining firm called Whitehaven Coal. Whitehaven was on the auction block, but they actually took themselves off the block, saying that all the bids were too low. So I think the Yanzhou Coal Mining's move today, those earnings or the dilution fears that often are raised when a company issues shares and buys another company, that's off the table now. So the stock is getting a lift today. Yanzhou Coal Mining, ticker YZC, on the New York Stock Exchange. Again, shares up 5% or so to 37.47. Now, when we're in a healthy market, okay, we go through a period of market softness. Maybe the market corrects 5, 6, 7%, and then you get some good follow-through, good confirmation, signs that institutional money is starting to come back into this market. A chart like Yanzhou is one that can deliver additional gains. You can see the stock made a big move in late March, early April, staged a nice strong technical breakout, and then just recently came into its 50-day moving average. After a stock breaks out from a consolidation phase, it will often come back to the 50-day moving average, and if it's a strong stock, it will be supported there. Now, support at the 50-day moving average, you're seeing some instances of it recently, but really that's the exception and not the rule. In YZC's case, it does appear that the stock is going to be able to find support at its 50-day moving average. Probably a little too early to say, but the big volume, heavy volume gain today is certainly a compelling sign. And when a stock finds support at its 50-day moving average and it continues to show accumulation, heavy volume price gains, it continues to move higher, sometimes they're successfully able to stage a new breakout over its recent high. So this is a good one for the watch list. Yanju Coal Mining, if it can get over $39 a share in heavy volume, you'd have another technical breakout on your hands. But this is a stock with excellent fundamentals, good growth prospects. Again, they're a coal mining company in China, and really a bright spot in China right now, considering the technical damage that a lot of China names have suffered in recent days. Taking a look at some other resilient stocks today, stocks in the universe that I cover, I wanted to take a look at Green Mountain Coffee Roasters. This is a favorite of short sellers, but again, a company that has a tremendous growth story, and I think the stock's technical strength is truly remarkable, frankly. You can see a big gap up here in March when the company reported earnings, and then it held on to all those gains, and then it gapped up again just about 2 weeks ago. I believe that was on the Starbucks news that they're going to start selling single cup Starbucks coffee. But you can see what the stock has done after that gap up. People say, well, a stock always has to fill its gap. It's not technically healthy if it doesn't do that. But there are, many, many examples of stocks that gap up in price and don't fill their gap, and I suspect that Green Mountain could be one of these names. But you can see it just basically moved sideways. Shares are up 0.3% today to 74.25, holding well above its 50-day moving average. An example of a high beta, aggressive growth stock that continues to show strength in a market that is quite unsettled, frankly. Here's another one. We'll enter ticker MELI. This is an Argentina-based ADR. That is, it's a company that basically operates an online marketplace in Latin America. The company is called Mercado Libre. And again, a stock that has come under some selling pressure. You can see a big, strong breakout here in March. This was right around the time, remember when we talked about this follow-through day that the NASDAQ flashed on March 24th earlier this year. That was really the last time where there was some good money to be made in this market. But this stock broke out right around March 24th, broke out over, say, $77, $78 a share, ran up to about 92, and now it's come in with the broad market, as most stocks are going to do. When the market is soft, most stocks are going to follow the market lower. But it's still holding above its 50-day moving average, and shares up 2% today to 86.65. Its 50-day moving average is 81.31. So Mercado Libre, another stock showing strength in an unsettled market. It's these types of stocks that you want to just keep paying attention to. I'm not interested in buying Green Mountain in this type of market environment. I'm not interested in buying Mercado Libre in this type of market environment, even though they're stocks that have a lot of qualities I like to see. There's too much distribution in the market to think they're going to work in the near term. But there's.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the technology insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a technology insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. If you're looking for a unique approach to the market, consisting of a focused discipline, including risk and money management, this book is for you. It'll allow you to take control of your finances. The Art of Timing the Trade is a complete system for making money, protecting profits, and minimizing losses. Go to Amazon.com now and order your copy of The Art of Timing the Trade.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Okay, folks, welcome back. Ken Shreve with you. Breakout Investing with Ken Shreve. Before we... I got cut off at that last break, but I was talking about Green Mountain Coffee Roasters and Mercado Libre. Basically, the point there is that there are several good growth stocks that are showing pretty good technicals right now. But I think in a market that's under distribution, like this one, the risk generally outweighs the reward. Buying stocks like this that have good technicals at the moment. Some might work. I would really consider them more trades than anything else, where if you get several points in a short amount of time, you could quickly take profits. But generally speaking, in a market that's under distribution like it is now, you kind of want to wait for the selling to abate and watch for some key signals that the market is gonna head higher. And maybe next Thursday show, 2 days from now, we'll go over some of the signals you want to look for. I have a chart of Priceline up here. This is a market leader that has come under quite a bit of pressure. Shares hit an intraday low of 493 today. It's well off its lows, up 0.2% now to 504.26. This is a stock that I sold just recently in my model portfolio. I don't own it anymore. I don't expect to own it in the foreseeable future. But I sold it up here around $545 a share. I just thought that the stock was getting long in the tooth, and I actually unloaded it right ahead of earnings, and I just didn't want to sit through an earnings report that could potentially disappoint the market. Another stock that I recently got rid of and took profits in my model portfolio, Wynn Resorts. This is a name that I did pretty well in. I think it was took a gain of maybe 25% or so. But just sold this one yesterday. Again, a stock that's still holding above its 50-day moving average at 134.50. Shares were recently trading around 142.50, up 1.4% on the day. Some of these stocks could have these bounces where they start to look strong again, but generally when you have a good profit in a stock, I'm not afraid to take a profit, especially if I start to see signs that the stock is getting tired. And I made that judgment in Wynn, especially when you look at a weekly chart. This is a daily chart that's up in the Tiger's Den right now, but a weekly chart, you'll see a couple of weekly closes last week and the week before where the stock was finished near its low. It just seemed to me that buying demand was starting to dry up in the stock. And again, when you're in an unsettled market like now, it's generally better to get out of the market's way, take profits if you have them, start to raise cash, and then wait for renewed signs of strength in the market. Let's take a quick look at C-Trip. C-Trip, I did a video on C-Trip recently ahead of its earnings report. The company recently reported earnings. This was a good example of a nice technical setup, but again, a reminder, you don't want to buy stocks that with good technicals ahead of earnings because, they can disappoint, and that's what happened with Ctrip.com. It's a provider of online travel services. Good bottom line and top line growth, EPS up 24%, sales up 36% to $116.7 million. But its second quarter sales guidance wasn't so hot. Gross margin really solid at 78%. Operating profit margin rose 1 point to 34%. Morgan Stanley reiterated an overweight rating on the stocks, saying there's still plenty of room for growth for this company, as only 3% of China's internet users are currently served by C-Trip. So this is a broken stock now. Okay, it looked like the stock could be poised to break out over $50, $51 a share, but you can see a gap down today. It's trading up near its high, but still down nearly 5% or so to 44.15. So what looked like a breakout taking shape last week, all of a sudden doesn't look like it's going to happen. So got to tread cautiously out there. And I just technically strong stocks ahead of earnings, I still won't buy them. I'd rather earnings pass, see what the numbers look like, and then look for your entry point. But I look at C-Trip right now as a damaged stock. So that's it for today.